Welcome back. Let's get into that market picture now. And Asian shares vaulted to 6-month highs this morning. Now, a lot of those were surpassing their July peaks as hopes that Washington may indeed roll back some of the tariffs it has imposed on imports from China shored up some of the optimism on global economic outlooks. Now, China is pushing United States President Donald Trump to remove more tariffs imposed in September as part of a phase one of that U.S.-China trade deal. It's $112 billion, which is expected to be signed off later this month. Now, Chinese President Xi Jinping said on Tuesday that the global community needs to bring down trade barriers. Whether that will certainly be the case, we'll find out. But nonetheless, Japan's Nikkei did manage to rise 1.7%, closing out at 23,251 points. A good day out in Hong Kong as well, seeing the Hang Seng rise up there just around 0.33%. The Shanghai Composite as well doing well, picking up over 0.5%. That's sitting at 2,991 points. Let's head on over to the United States now, where all three major indices posted record closing highs last night, extending what has been a recent run of gains on hopes of a U.S.-China trade deal and, of course, the improving U.S. economy. We did see some results coming out of the likes of Uber, and even though they do say that they've been spending a whole lot of money on discounts and incentives to ensure that they get more drivers and they price out their rivals, they'll only turn a profit in 2021. For now, however, they did incur a much larger loss than some would have hoped. That share price going down as much as 5.5%. The Dow Jones Industrial Average did manage to tick higher, however, 0.4%, 27,462 points. The S&P 500 did also gain over 0.33% to close at 3,078 points, while the Nasdaq Composite added over 0.5%, 8,433 points there. Now let's head on over to that European market picture. A lot of sentiment has, of course, come through from China, as perhaps that trade war situation seems to be easing ever so slightly. There is some positive sentiment as well, with automakers out in Europe, Japan and North Korea as well. So perhaps some sentiment flowing through on that front. On the local front, of course, one of the major things will still be how South Africa is going to fare when it comes to its economy. We have seen a rebound in the local currency, which has certainly helped, as Moody's did give us a slight reprieve, even though they did downgrade South Africa's credit outlook from stable to negative. So here's that European picture then, a positive market flow across the board. So taking in some of that positivity out then from the Chinese trade situation. Over into the local bourse as well, some positivity. The Rand and the All Share taking in some positive sentiment following that record closing high out of China, as well as the United States. More records seemingly tumbling through as well then as we get into that third quarter earnings picture. On the local front, we also do have some earnings news as well. So those companies continue to make an impact, with the resources also headed higher quite substantially as well today. Onto the other counters then as well, you'll find that the gold share, the gold commodity itself, however, was sitting below that 1,500 key mark. It has then picked itself up and went ahead and climbed above that mark, but for now sitting just above it at $1,503 a fine ounce. It's 934 for platinum, while Brent crude, well, we're seeing OPEC perhaps agree to some sort of restrictions when it comes to that oil price, but they're not 100% sure whether that will be the case for OPEC and all the other countries. Of course, combined, they've called themselves OPEC plus. So the doubts on that will certainly impact where that oil price goes. So too will global growth demand. On the local front then, let's take a look at how the currency is faring. It's now gotten to 14.69 against that US dollar, having breached 15 Rand, of course, after the medium-term budget policy statement last week. We are consistently seeing some strength filter through back into the local currency. Perhaps hopes of reform, hopes of change are perhaps seeping into the market, misled or not. Well, that doesn't seem to be phasing the South African currency. 14.69 against that US dollar. It's 18.94 for a pound, having sat above that 19 Rand mark for some time, and 16.34 then for a euro. As usual, let's head on over to the Johannesburg Stock Exchange. Today, we will then be joined a little bit later on as well then by Edgar Mafoko then from FNB Wealth and Investment, who does join us. Edgar, thank you so much for the time. Really appreciate it. But it's a green day on the JSE following what was yesterday a good day as well. Record closes across the board in the United States and as well in Asia. Seemingly, we're all taking a good spur out of that China-US trade front as well.
Yeah, it does seem as though we are riding the wave of positivity that you've just mentioned. So we're not complaining at the moment. I think 2 consecutive days of really positive gains on our market. And I mean, yeah, it all comes back on the back of these, positive news flow out of these trade talks between the US and China. But yeah, I think we'll ride the wave for now and enjoy it for what it is. And I mean, locally as well, we did get a bit of a reprieve from Moody's last week, Friday. So that's why you're seeing the currency coming back to levels that we haven't seen since before the third quarter of this year. So overall, very good for our market. And I think we'll see what happens in the US later on. But I wouldn't be surprised if there is a bit of profit taking in international markets going forward. I think if you go back to last year, every time it seems as though we're getting closer to a deal, there has been something that's held back both the US and China.
Yeah. My worry, though, and I'm going to ask you, Edgar, if you could perhaps just explain to our viewers back home as well, then, why would there be a sense of positivity in the local currency if we did get somewhat of a damning statement out of Moody's even on Friday, who really said that our economic picture is not good, we're not helping ourselves in any way, and the fact that we have to continue supporting our SOEs is not necessarily helpful. Yes, they didn't downgrade us fully, but we did get an outlook change to negative. How can we find any sense of positivity in that statement last week?
I guess the one major thing to point out is that after that budget that we got last week, I think one could have argued that instead of Moody's actually changing the outlook to actually a negative one, they could have really gone straight to a downgrade to junk. And I mean, if you look at our bond market and if you look at the rand in the run-up to Friday, it did look as though the market has priced in, the worst, if you want to put it that way. And I think that's why you're seeing a bit of a reprieve in the currency, given that Moody's has given us a bit of a chance to maybe get the house in order, if you want to call us that. And I mean, it does buy us time. I think we've got about 3 to 6 months before the budget, the bigger budget next year. And I mean, one will hope for a change, but if things, go the way that they've been going over the last few months, I wouldn't be surprised if we do get downgraded to junk early on in next year. But I think it does look as though the market has taken, that policy statement into its strides. As much as, yes, it is a negative, but we have avoided an outright downgrade to junk status, and I think that's why you're seeing this rally in the rand.
Yeah. All right. Well, let's chat then about some equity news, and I wanted to talk specifically on the retail counters here. Shoprite comes out with their statement yesterday, and we did get to discuss it as well yesterday, but I want to touch on it a little bit more. You get sales going up around 10.3%, which in essence is positive. Yes, non-SA sees a fall of around 4.95% or so, but Shoprite then says they may be looking to exit some of their Africa operations. They were the household name when it came to companies from South Africa that had gone into Africa. Is there no hope of resuscitation in the rest of the continent?
It's a very complicated one, but I think it's a question of scale. If you look at ShopRite, if you look at Pick n Pay as well, at most they still bring in about 20% of their revenues from Africa. So I think for them it's a matter of, is that risk really worth you, increasing exposure to the continent? And if you look at some of the question marks that they've raised around the continent, if you look at Angola, for example, where ShopRite suffered, hyperinflation last year, is it really worth them taking more risk to expand offshore? Or would they rather just come back home and take the risk that they have with a subpar economic growth that we're getting locally? And I think it just tells you that a lot of these companies, would rather, take the single-digit growth that they're getting locally than take the risk offshore, which could pay or not pay off. But I think after what you've seen over the last quarter or so, if you look at all the retailers across the board, they've all gotten burnt, going into Africa. So I think they all feel much happier to just come back home and just get the little gains that they're getting here in the local market. Yeah.
So how big a nod is that for the local economy, especially considering we have the second South Africa Investment Conference underway today?
Yeah, once again, I would say, I think what we've seen in our market is that, I think once you start focusing on promotional activity, it does start to pay off. And I think you're seeing that in the bigger guys, your ShopRite and your Pick and Pay. But there's only so much of a market to compete for out there. And I think going into the conference, I wouldn't really expect much to come out with regards to the retailers. But I think going forward, I think if you look at the other sectors, I think you saw what's happening in automotive. I think that is one area outside of retail where we could actually expand the economy.
You speak of automotive, and of course the president earlier today just launched a trading economic zone then outside at Silverton in Pretoria as well. Obviously that was an automotive manufacturing segment. Is that where you're looking for a little bit of value now, if there's anywhere at all within our equity space?
It's a very tough one. I think if you look at the space as it is, we do have a lot of exporters that are listed on the JSE. If you look at the likes of your Super Group, Imperial, historically large players in the game. But I think we are looking for new opportunities. I think you mentioned manufacturers. I think that's one part of the JSE where we are very light at the moment. And I think given the positive news flow that we're getting at the moment, I think who knows going forward, we might get a few listings in that space. I think the one positive is that, we will be creating new jobs in that space. So I think, that is a positive for the market. So we'll just hope for a bit of consolidation and hopefully a bit more new listings in that space going forward.
Yeah. Edgar, really appreciate your time, but thank you so much for it. That's Edgar Mafoko then from FNB Wealth and Investment, joining us live from the Johannesburg Stock Exchange. They're helping us unpack that market. Just some news as well that has come out this hour as well as the Eskom. Well, Moody's has decided to push Eskom further into non-investment grade, unfortunately, and they say that in order to be able to restructure and remanage Eskom in its current state, it would need cabinet support, which means that it would need even more financial support. So they're not trusting that the situation will look any better at this point in time. Moody's cut Eskom's long-term corporate family rating or unguaranteed debt from B2 to B3, which is now 6 notches below the investment grade level. It also does have a negative outlook, which means that it could go even further into junk status. The agency on Friday, of course, did keep South Africa's sovereign debt at Baa3, which is the lowest investment rating. But another bite then for Eskom. We'll come back then and give you a little bit more when it comes to the economic news.